sharp sell-off on Friday takes the Nifty below 24,900. The sensex loses 1% this week and all sectoral indices end in the red. India, however, was not alone as markets across the world came under severe pressure after data from US weighed on sentiment. What next? Hello and welcome to Editors Roundtable. I'm Reema. With me are Nimesh, Prashant and Nigel. And joining us today in our newsroom, Atul Mehra, Fund Manager at Motilal Oswal AMC. Atul, thank you very much for joining in. Tough week, guys.
Tough week, and I must say, Atul is the only one who's appropriately dressed. But yeah, I mean, it's been actually, Friday was, it seemed a bit out of the blue, right? It was not as if global markets were indicating a large cut or anything of that sort. We sold off 1% all told. Yeah. But, you know, you usually used to 1% up, not 1% down. So I think that is the bit. Just a couple of points here. So buy close today, and you know, don't read too much into it because we've got a big data point, and all of it may change on Monday. But the fact is, buy close, just price action-wise. The Nifty at the day's low tested the 20-day moving average and then almost tested. I mean, missed by about 30-40 points, and then bounced. The Bank Nifty is ended below the 20-day. Sometimes, I mean, these act as short-term reversal levels. We'll see. Global market, and I've been saying this for the last 2 weeks or so, the mood has turned a bit more cautious. And there's lots of reasons, but I think the most widely cited sort of talking point, of course, is seasonality. This time of year, especially in an election year in the US, there is, I mean, it's a very clear trend. Markets go into the election a little lower, and then, of course, you know, they do what they do after. So from here all the way till November, that's one of the reasons. There are others as well. I just noticed one more thing. The dollar JPY, right? I mean, we all forgot about the yen after that mini episode in early August. The dollar JPY, if you look at what it did today, it's back at almost the August lows. I mean, the USD JPY, which means the JPY is at the highs. So 141.7, 142.2. These are the levels to watch. This is basically the high that the yen hit. And then, of course, it reversed back to about 147, 148. The same reason does not cause similar kind of reaction in markets. But sometimes, you know, it does, maybe to a lesser degree. Will it cause another round of funding stress? I think that's something to watch from a global arena. Of course, I mean, the big one later today, as I started by saying, why all of this may reverse, and we'll see, is the jobs data, which comes out later today, around the time that the US markets start to trade. So, I mean, the ideal perfect scenario is going to be a slight beat. Not too cold, not too hot, a 25 basis point cut, and then, you know, life is not so bad. So we'll see.
If only you were the Fed governor, you've laid it out perfectly what the markets want. But Nimesh, there was that SEBI angle also, right, on FPIs?
Yes, but you know, I would say don't read too much into it because most of the pain seems to be out of the way. The only thing was today was the reason, the deadline to comply with that SEBI norms on FPI. In simple lines, if any FPI was owning more than 50% in a single stock or in a single group stock, or their AUM is more than 25,000 crores, they have to comply with certain norms, which means that even the last holder has to be properly documented for, and the details has to be with the regulators. If not, then they have to either sell or they can sell in the next 6 months with a 5% penalty. So I spoke to some larger guys on the back end, and they believe that largely it's been done with. It's not like, you know, every FPI waits for the last minute or the last day. But I guess apart from that, there were a couple of other reasons as well. We have, as Prashant pointed out, the global data is something to watch out for. Some political noise as well, Friday factor as well. So all this led to a bit of a selling on the last day of this week.
Atul, what's your call on the markets? Are you a bit cautious? Because many of the fund managers we speak to have tilted their portfolio more towards defensive. They've brought down their exposure to defense, capital goods, etc.
Right. And also, a lot of fund managers have raised the cash levels as well. If you can talk about your levels, your funds and cash levels.
Sure, absolutely. So I think a couple of things. So one is in terms of sectors, like I think there is, if you look at the last couple of months at least, there is the underlying change in sectors. There are sectors starting to rotate. Like IT has started to do well, start to outperform. And as we head into the US election, as we head into the Fed rate cut somewhere down the line, there is a general expectation of spends coming back. So we are, in our portfolios, we are positioned better in terms of IT services. Additionally, I think also if you look at private banks per se, like I can't remember a time when we've had like really good quality balance sheets and very well-run businesses trading at like low teens, mid-teens multiples. So again, even on the private banking side, there is value, I think, that is starting to emerge. So the general thinking is that if at all like the market gets into this sideways zone, some of these sectors which so far haven't participated as much, they should start to do well and outperform from here on. And some of the ones which have done extremely well, where valuations have got a little bit on the higher side, they are seeing profit booking, and we've seen that, I think, across the board in the market.
From here, what do you do, Atul? I mean, just a quick word. I mean, what do you buy? So I was talking to somebody who's raised money for a fund structure. Small, I mean, it's, really small and just starting out. But even with that small corpus, I mean, you're saying slim pickings really in terms of what do you buy here at these levels. If you're already invested and you're getting cash, that's a different story.
Yes.
But if you're starting out, I mean, it's a how do you build a portfolio is the question.
So luckily for us, we are, in terms of having a running portfolio, we have most of our, like, we never take cash call as a house. We are always fully invested. We never second guess the market. And we all know, like, second guessing the market in the long term is not a worthwhile exercise. So we never take a cash call on the market. We are fully invested all the time. And even at this point in time, like I was saying, like, there are opportunities, there are pockets of opportunities in the large cap space, for example. Like, if you look at, like, the general undertone of the markets has been towards mid and small over the last 2-3 years. And we believe that there is a time where even the large caps should start to participate in a bigger way. So one of it is, in a way, positioning portfolios towards names which, in terms of, haven't done as well, where there is underlying business momentum which is fairly strong, and for whatever short-term reasons, they haven't done as well. So our thinking is to be more aligned towards these pockets, and at the same time opportunistically look for opportunities which primarily in the last, I think, 6 months to a year have been on the primary market side. So the primary markets is if you look at the numbers, YTD, CYTD, we've had almost $10 billion of IPOs in India. The US has had $20 billion of IPOs. So remember, US is like a 10x market versus India in terms of market cap, but the level of IPO activity in India is
twice.
It's 50% of the US.
Wow.
Oh, so 10 here, 20 there.
10 here, 20 there.
20 there. Okay.
And they've had their peak in 2021 at like $150 billion of IPOs. So the globe is not seeing what we are seeing. So I would say that there are a number of new interesting businesses coming to the capital markets through IPOs.
So you're investing them after they list, or?
We have been participating in a number of IPOs while like, part of the anchor book, and also participating overall in the
Premier Energy one, did you?
Yes, we did. So we've had like a number of names. I wouldn't be talking stock specific, but we have.
But since you mentioned that, what about Ola?
We have not invested in Ola, but we look at the space and we're tracking the space.
Okay, and the IPO market continues to remain hot. But let's talk about one more theme. What was also down today was crude price. In fact, this entire week, crude prices and Brent crude turned year-to-date negative. And Nigel, that made the paint companies outperform, especially names like Asian Paints.
Well, that's right. You know, Atul, we just discussed about how some of those underperformers could possibly perform. Well, I wanted your view on this space. So let me get to the ball and come back. You know, the question is, will the paint companies paint a brighter picture for the second half of this fiscal? Because keep in mind, these stocks have actually underperformed the market well in the last 1 year or so. The Nifty has seen a big surge, but if you pull up that chart, it'll tell you that the paint companies, well, they have been lagging big time. The problem was that they were fearing that there's going to be new entrants, and the new entrants will give the incumbents a run for their money. So that was the problem point, and the industry on the whole itself was in a bit of a tizzy. So industry headwind as well as a new entrant, that was what was weighing on some of these incumbents. Now there are key triggers from here on, which could mean that the second half of this fiscal is better. First, pricing. That's picked up. You've seen a couple of price increases already in the second quarter, and the hope is that prices will recover and volumes as well will pick up in the second half of the year. Point number two is the rural economy is seeing some signs of revival, and that's something that a couple of managements have spoken about as well. Now, gross margins could improve from here on. As we mentioned, crude prices have declined, and you have these crude derivatives like titanium dioxide. Well, that's around 20 to 30% of the total raw material cost, and that could see a bit of a decline. But keep in mind, that will only come towards the end of the third quarter or towards the end of the fourth quarter as well. But if that softens, that's what could help the gross margins. Plus, we'll be having operating leverage as well that'll play out. So profitability could look quite good. The other big question was Birla Opus. They did their launch, but at least as of now, it appears that it's not been that big a disruptor in comparison to what the street had anticipated, and through the commentary as well that came in from the incumbents. And finally, well, the street believes that maybe it's an 80,000 crore industry, which is growing in double digits. So the new players, as well as the incumbents, they could all coexist. At least that's what they believe as of now. Well, the new entrant, though, Birla Opus, they are saying that they want that 10,000 crores in the next 3 years. But the response coming in from all of them, whether you look at Asian Paints' response or Berger Paints, Asian Paints was very clear and cut. They said that, in fact, the new launch seems to have underperformed expectations. Berger as well, they said that they're confident of competing effectively against a new entrant, while Indigo Paint said that there's always been competition, and they believe that competition actually will be healthy for the industry. And finally, Kansai Paints, well, earlier they were sounding a little bit cautious with regard to the competition that's coming in there, but they're saying in the last 6 months, they believe things have improved. So the commentary that came and said that that new entrant hasn't disrupted things, at least as of now. And as I said, it's a large 80,000 crore industry. Finally, valuation-wise, it's not looking too expensive. You'll say, what are you talking about? These stocks are trading by 40 and 60 times, and you're saying they're not expensive. Well, they're not expensive in comparison to the 5-year average, which come up for you on the screen. So the big question is, will these paint companies that have been underperformers paint a rosier picture for the second half of this fiscal, and from here on? Well, time will tell. Well, let's come across to you, Atul. What's your view? Paint companies, big underperformers. People would say that in the last 1 year or so, their portfolios are up between 20%. You had Asian Paints, you have not made a single rupee, though the stock in the last 1.5 months has bounced up, I think, 10% from there on. So do you think it's got a longer road from here on, or do you think this is just a bounce and maybe some of these positives may not really play out?
Sure. So in terms of, I think, if you look at the, you spoke about, in your presentation, you spoke about the disruptive aspect.
Yeah.
Now, if you look at other industries, like, for example, Telecom for that matter, there you had a mega disruption because the basis of competition changes completely. When somebody comes in, when the erstwhile market was voice, and somebody comes up with a plan which is voice is free and data is all you need to pay for, the basis of competition changes completely.
Indeed.
Right? And it's a digital business to that extent. Paints, in comparison, if you look at it, it's a business which is, end of the day, it's a brick and mortar business. And historically, it has been a very consolidated kind of industry. Yeah. Now, you have a new player who comes in, but he's a player who, while might not have been in the paints business, but he has been in the broader building materials ecosystem.
Indeed.
And he's trying to, in terms of use the advantages in that part of the business to build their venture in the paints business.
Indeed.
Right? So, and at the same time, it is not like, I was saying, it's not like disruptive. You're not.
So you believe all of them can coexist? Or do you think that the challenge is still there?
I don't think that the degree of competition will be anyway like the Telecom episode that we saw. We all remember disruption as Telecom. The biggest disruption we've seen in the last decade in India has been Telecom.
True.
So I don't think it's anywhere close to that. It's more of one additional player coming to the market, and they will gain some share because of the brand that they have, because of the distribution strength that they have, and because of other businesses. Remember, they have businesses where they are the market leader in, say, something like a cement business, for example. Yeah. So they will draw from the strengths in other businesses and gain some share in the process, but it's unlikely to be disruptive in that sense.
Indeed. Now, Rima, before you take that short break, just want to mention a couple of points. The real sense on demand we'll know only by the end of September, because that's towards the end of the festive season as well as the monsoon, and also this titanium, the input cost that has cooled off. The benefit will flow only in quarter 4, because sometimes there's a bit of a lag, and also there are various other aspects. So just want to put that on board. But otherwise, there are some triggers from here on.
Absolutely. Distribution is a huge aspect, right? When you go to the shop to buy paint, you've got to have the product. And I think the others, the big guys like Asian Paints, etc., they've got that. We speak with other paint companies as well, and they all, I think it's underappreciated, that fact, distribution. A lot of the guys, Kansai, etc., say, well, we're expanding in a very large way across the touch points, essentially. Well, we'll take a quick commercial break here. We're going to come back. We'll talk about the Bajaj Housing Finance's IPO, right? And Rima sat down with Sanjeev Bajaj and, of course, the CEO of the business. So we'll put the spotlight on it. It's a large player. So we'll do that and discuss more with Atul on the other side. Stay with us.
Welcome back. You're watching Editor's Roundtable. So Atul was just telling us how hot the primary market has been, the IPO market in India, and it's only going to get hotter because next week, Bajaj Housing Finance, it's the first IPO from the Bajaj Group in more than 3 decades, and it opens up for subscription starting Monday. The overall valuation of this company is close to 60,000 crore rupees. And just some details, they're raising about 6,560 crore, which is a combination of offer for sale, where the promoter will bring down their holding to about 88-89%, and the balance will be a fresh issue of 3,560 crore, which the company will use as growth capital, which will suffice them for the next 2 to 3 years, according to the management. So just a couple of points. First, the opportunity for housing finance company. Now, the management of Bajaj Housing Finance told me that the home loan market in India is 30 lakh crore plus. The loan against property market is at 10 lakh crore plus, and according to CRISIL, this market is growing at 13 to 15%. So the runway for growth is quite high. Now, amongst the players here, you categorize them into 2 buckets. One are, the companies which cater to the higher value ticket size home loans, and then you've got the affordable housing loan. So Bajaj Housing Finance comes in the prime segment. Their average ticket price of home loan is the highest amongst peers. It's the second largest player. Its AUM stands at about 97,000 crore rupees. So the highest is LIC Housing. After that, you've got Bajaj Housing Finance. But Bajaj Housing Finance has been the fastest growing housing finance companies. Whether you compare it to these players or even the affordable housing finance players like Aadhar, Aptus, Aavas Financiers. Secondly, the asset quality of Bajaj Housing Finance is the best in class. Despite the company increasing their focus on developer finance, which typically is seen as a little more riskier, they've managed to maintain their, asset quality. Gross NPAs, as I said, best in class and at just 0.28%, and the net NPA at 0.11%. So these are some of the strengths that Bajaj Housing Finance has managed to maintain now for the last 7 years. It's been 7 years since the company started operations, and in a span of 7 years, the company has become the fastest growing housing finance company. Now, the only thing is that the valuations are at a premium. We know the Bajaj Group itself commands a premium. All the Bajaj Group stocks, whether it's finance, Finserv, Bajaj Auto, they've all been big wealth creators. So this company is also coming with a premium compared to its peers. Is it justified? Have they left enough money on the table? Well, that remains to be seen. But let me ask Atul. Atul, now you've been tracking the IPO market very closely. You've invested in many of the recent ones via the anchor book. So a couple of questions. One, do you like the housing finance companies because the asset quality has been pretty strong? Secondly, where does Bajaj Housing Finance fit in? Is this a company that you think is attractive? They've left money on the table. And thirdly, because you like holding companies, there is also Bajaj Holding, right, which gives you, the best of all. Yeah. So would you still stick with Bajaj Holding, or would you want to add this one?
So firstly, I think in terms of, like you mentioned, like first IPO in like 3 decades.
Yeah.
And a management team which has absolutely proven itself. They're the blue-eyed management team. If you go back in time, like the performance of Bajaj Finance over the last 2 decades has been spectacular. So from that perspective, and especially in financial services, the most important things are the sponsor, the management team. So those are the key elements which determine the success of a financial services business. And from that perspective, Bajaj Housing, they seem to have all the ingredients to be a very successful housing finance business. Additionally, if you look at it, what's happened on the bond market side is after HDFC's merger with HDFC Bank, there is a general, in terms of vacuum for a large credible player to come in and fit in there. So I think from that perspective, even on the bond market side, things should be fairly good for Bajaj Housing and so on. Opportunity in terms of growth, see, if you have credibility, like in financial services business, what is important is if you have credibility, your cost of funds tends to be the lowest. Now, that low cost of funds enables you to lend to the best set of borrowers. And because you have a low cost, you can outcompete other people. and you can price your products much better than other products in the market. That's how you continue to build market share over a period of time. And I think from that perspective, Bajaj Housing, they have those ingredients. Holding companies, yes. So I would like to point out that although we hold some of the names in the portfolio which are holding companies, I think the key is if you look at it more recently, we have a regulator who is concerned about the aspect of holding company discount for minority shareholders. And they've had a number of initiatives in this particular aspect where they've had a number of discussion papers, and now they have a call auction mechanism whereby they're trying to look at a price discovery for holding companies and so on. So a lot of those things will eventually result in holding company discount narrowing for the more credible companies, because holding companies also, you don't need to buy any company, you need to buy underlying businesses which are great, and added you have an optionality of holding company valuation coming about.
Absolutely. Yeah, just a quick word. So Bajaj Finance, I'm assuming you're interested, right? You're
Housing, you mean?
Housing, sorry.
Yeah, absolutely.
You're participating.
Absolutely.
And do you own any of the others in the space? Housing Finance? No.
Housing finance, no, not really.
Okay. And would you mind naming any of the other, apart from what we discussed? Ola, no. Premier Energy, yes. What else?
No, I wouldn't want to get into that conversation.
Premier Energy will be tricky, right? I mean, you put money in the IPO and then the stock doubles in 4 days. I mean, today, I think it's almost triple today, right? It's 12.
No, not really. I don't think so.
Not yet. It's not 50
Not
yet.
triple.
Yeah.
450, today it was around 1100.
He's going to party. Tricky.
But I wouldn't want to talk stock specific.
1150, I think, today.
Yeah.
Telecom is... Sorry, go ahead.
Sorry, you briefly spoke about disruption in the telecom.
Yeah.
We saw a big reaction in Vodafone today. Generally, what's your view on telecom space? Because I was talking to one of your colleagues, and he seems to be quite bullish on telecom as a sector.
Yes,
What's
absolutely.
your view?
So we are bullish on telecom.
What's the thesis there? I mean, it's a consumption play now?
So the key thing is it's all about ARPU. So because in telecom you have a fixed cost business. The business is absolutely fixed cost. But the tariffs here are so low that there is massive repricing potential in the future. And the key thing is, like, in a business which has very high fixed cost and you have repricing potential on the pricing, incrementally whatever repricing that you do, 80 to 90% comes down to the bottom line.
Yes.
So that is going to be the key. So that is the key reason for the bullishness in telecom. We own some of the larger names in telecom in our portfolios.
Okay, Atul, thank you very much for coming down to our studio. Guys, it's been a tough week, but we're going to call it a day now. And there's festive cheer this weekend. So enjoy yourself, stay safe, and keep watching CNBC TV 18 for more news and updates. Thank you for watching this show.